Are you of the persuasion that stocks are a great investment for the long term, that they never go down, that every dip should be bought? There is no way that the stock market could ever collectively go down 90%. This is a price chart going all the way back to 2004 when the stock first started trading. It's a great business. It's a drugstore. It's Walgreens. Everybody needs drugs, right? There were Walgreens on every corner. Back here before the COVID, Walgreens hit an all-time high, split adjusted of about $96 a share. On Friday, this is a monthly view, this has taken years to happen, Walgreens closed at $8.77. The stock is down about 90%. Maybe you say, well, that's Walgreens, that's a drugstore. I'm in tech. Let me show you something. Intel. You've heard of Intel. They're in virtually everything we have. Cell phones, computers, laptops. They are, in fact, the largest chip manufacturer in the world. This is Intel. Intel hit a split adjusted high rather recently of about 64 some odd dollars a share. It's now trading at, closed on Friday, on a monthly basis now. This is going back years, but on Friday it closed at $18, $18.89. In fact, if you had bought Intel back 20 years ago and held it, you'd be down about 20%. Now I know what you want to look at, the overall market, the NASDAQ. Let's start with the SPY, the S&P 500, on a monthly chart. On a monthly chart. Do you see this low down here? This is 2009. See this little dip here? It was just a little dip. But the politicians and the powers to be told everybody it was the greatest recession ever. Remember? The Great Recession. And then they went to work and they started quantitative easing, monetizing the debt, digitizing money, printing money. QE1, QE2, QE3, QE4, Operation Twist, and then the QE that sparked much of the inflation after the COVID decline and gave us this. And here we sit up here. Could the market come down 90%? It could. It absolutely could. We're going to have a choice of presidents in a few more weeks, month and a half. One of them wants to increase corporate taxes. Corporate taxes from 21% to 28%. She wants to increase the capital gains tax to 44.5%. And she wants to tax unrealized profits, meaning if you have profits in a portfolio and you have not yet sold them, they want to tax them. They might want to put on an estate tax before you die. There's one truth in this world, and that is money flow. People want to hold on to their stuff. Do you ever see those videos of a plane that belly lands? God forbid you're not ever on one. And it's on fire. It's not a complete knockout. and you see people coming off the plane carrying their suitcases. They train the stewardesses and the stewards to tell everybody just to get off the plane, because it's human nature to get their stuff. They want their stuff. It's also human nature to want to protect one's portfolio, one's retirement. When the shit hits the fan, folks, they're going to want their stuff. They're going to want to sell. This decline here was 60 to 70 some odd %. Doesn't look so bad. A 60 to 70% would put us down around here. Now, if you're 20 years old and have $10,000 in the market, probably don't need to worry about it. But if you're 50 or 45 and you got your $1 million sucked into maybe some Intel, maybe some WALLGREENS, maybe some Google and some Apple, maybe some crypto, I wish you luck. Be sure to visit stockmarketcaddy.com, because if you believe that the Bureau of Labor and Statistics, the data that comes out every week, is true, I wish you luck. If you believe that the Federal Reserve has an interest in your portfolio, an interest in your standard of living, I wish you luck. If you believe that the markets are not rigged, I wish you luck. Because you see, folks, we don't believe the numbers. I don't have faith in the Federal Reserve. And I do believe that the markets are rigged. That's why at Stock Market Caddy, we bend over backwards, day in and day out, for weeks, for months, for years, developing a systematic approach, developing algorithms to do one thing: track money flow. Because money and the flow of money does not lie. It leaves footprints, and we track those footprints. And yes, as traders, we will exploit that movement. That's what makes markets. Without speculators, you have no market. However, if you are a buy and hold person, be warned, be forewarned. Good luck, everybody. I'm Baggin, and this is StockMarketCaddy.com.